Office vacancies are expected to skyrocket. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. I have my stein of coffee, and I thought we'd have a look at this article I found at commercialrealestate.com.au because it discusses the potential rise in commercial office vacancies as jobs are disappearing. And this is something I've mentioned previously, that I think we're going to see behavioural changes, particularly with people being able to work from home or work remotely. I actually had to do a chore today. I had to drive and get the Kia dropped off at the repairers. You know, they have to do some body work on it. And there was no traffic. And I honestly, even what traffic was there, which was nothing for a peak hour, was too much for me because I'm so not used to it anymore. So I can imagine a lot of people who are used to the daily commute and are being able to get through their work normally now may realize, you know what, this could be the way forward. And of course, that's going to have an impact on commercial property. So let's have a look at a few things before we get into this article. Over here I have from the Property Council of Australia, they've got their data room. And I've just discovered this, and we can look at data for different sectors in property. Now, I don't mind the Property Council of Australia. Their events are probably a little too expensive for me. And I remember some of their end-of-year functions, the groups they were donating money to were a bit too mainstream. So let's have a look here. We'll look at office because it's commercial. Now we can see the office stock levels. We'll click on this first. So the current total Australian office stock, so NLA, net lettable area by market. We can see, look at the Sydney CBD, then you've got Melbourne, Canberra, Brisbane, Perth, Adelaide, and the Brisbane Fringe. Go the Fringe. So you can just see the amount of square meterage that is available at each area. So Sydney and Melbourne definitely dominate, where Canberra and Brisbane are at the same level. I'm surprised. I thought Brisbane would be a bit higher than Canberra, but then again, it's civil servantville, isn't it, in Canberra? So we have office vacancies. So now we can look at the data to January 2020. We've got an 8% office vacancy rate. So you can see here, it peaked in 93 at over 20%. In Jan 2008, from the GFC, it peaked again, shot up again to just under 10%. We've been running a bit higher. We've been running over 10% for a while, and now it's dropped down again. So let's have a look at Brisbane. There you go. Look at Brisbane. We're between 10 and 15%. Let's look at Sydney. There you go. Look at that jump in the 90s. Just after the recession Australia had to have. Look at that climb. Now, do you think that this could mimic what we're having today? I'll make sure you can see it. Because right now, Sydney's under 5%. How's Melbourne doing? There you go, again, under 5%. But remember, look at that recession. Look at that delay. 3 years. It just shot up. Adelaide, once again, it's actually a pretty high for a while, hasn't it? Perth, there you go again. Everyone from that recession, 30% vacancy rate back then, and still now it's pretty high. It's between 15 and 20%. What about Hobart? We're seeing it, back at that recession, it climbed up, and I'd say that's probably a good, comparison. I think this coming recession is going to be tough, but it's good to see what happened then. Darwin, okay, they didn't have any offices, or they didn't have any data back then, and it's over 20% went down. We'll have to see. And Canberra. So Canberra, look at that. Look at Canberra from the recession. Compare that to, we'll jump to Sydney. Look at the difference. Look at Sydney and look at Canberra. So there you go, guys. If you're in property, maybe it's better to be in Canberra in commercial property. So we've got office demand. Okay, and here we have for Australia, net absorption, square meters. And we can see here it's going up a little bit, it's down, it's all over the place. Here you can see the demand during that last recession we had in the early 90s, where a lot of people will be too young. We'll look at Sydney. There you go. We'll look at Brisbane. Again, so it's been going up recently, that recession. Let's jump to Canberra. We'll need to look at Melbourne. Everyone wants to know Melbourne. There you go. Let's jump to Canberra. I want to see Canberra. There you go. So we can go, we've got office development pipeline. So what do we have? 2020, 682,000. Is that square meters? Yes, it is. 2021, 292,000 square meters. 2022, 582, and mooted, it's 536. Let's have a look in Sydney. You can see they've still got 154, 96, 143. Melbourne, what are we at? 388, 128, and then 221, and not hardly anything mooted. What about Brisbane? We'll look at Brisbane. There you go. I mean, that shows you, doesn't it, how little commercial office space is being in the pipeline here in Brisbane. And this is a good indicator as well for the construction sector, guys. 2021, 2022, and we'll go to Canberra as well. So there's still a fair bit. Look at what's been mooted. So we'll keep going down. Property return index by asset type. So total return, and you've got September and December, income and capital growth. So income 5.3, 5.2, and then capital growth is 6%. Well, we'll have to see what happens. We'll look at retail. There you go. Capital growth has been down the last 2 years. And the income growth too, that's going to cop it. Industrial. And there you go. So total office operating expenses. So what can we see there? I mean, there you go, in Sydney. It's heading up. Melbourne's heading up. Brisbane's heading up. Adelaide, heading up. What do you reckon about Perth? Heading up. And Canberra, heading up. Everything's getting more expensive to run. Property value sentiment index by asset type. And I mean, there you go. We can look at that dive there. That's residential. I want office. Whoa. Right, you can't even see that because I'm in front of it. Look at that. It's gone from 18.2 down to 35.5. So that's a 12-month ahead capital growth expectations index. So there is a huge fall in capital growth expectation in commercial property. Foreign investment transaction by volume type. So we can see here. What do we want to look at? 12 months to June 2017. Okay, I'd want some more up-to-date data. We've already looked at that in the past. Property sales to offshore investors by asset type. Here's residential, and that's 2020. So that's gone up to 14% of residential. That's interesting. Got to make sure you can see that, guys. But we'll go here to office. So office is, yeah, it's generally where it is. 2015 it was at nearly 19%. Dropped down. June up to 17%. So this is the ANZ Property Council survey. So we've got another thing I want to look at is just the Vanguard Australian Properties Security Index, the ETF. Just to look at the performance. It's an exchange-traded fund is a fund that has a pool of different shares or different assets that they've bought in. So you can buy the exchange-traded fund and trade that like a share, but you get exposure to all of these different holdings. Goodman's Group, they're a big industrial and commercial. Dexus is commercial. Centre, they're in, commercial and retail. Mirvac, I know, is multi-res. So it's a bit of a mix here with what they have, but it's a good indicator, I think, just to get a feel for the market sentiment to the sector. Now, we saw a huge plunge in sentiment here on the survey. Let's have a look at their performance. I mean, there you go. There you go. They're below, well, they're in line with the benchmark, and it's at negative 33.1. Since inception, it's only 7%. So if you've bought it right at the beginning and you've held it from there, you've only made 7%. So that just shows you how much of a hit it's taken. And the management fees aren't that high, I guess. But I mean, if you've got any others that you can recommend to me, just to have a look at for this type of data, you can see they've got 30 holdings. The median market cap is 8.18 billion. The equivalent yield is 6.93%. So that's going to, I imagine, take a hit with everything that's happened, because they've gone down, and they're heavily in Australia, their market location. And here's, it's 22% Goodman Group, then 11% Dexus Group, and then 9% Centre. So rather than having to buy these all yourself, which is pretty good. But It's not doing too well, is it? So based on what we've seen here, let's have a look at this article, because yeah, this is going to be what's going to have an impact. How many of our super funds are invested in these type of projects as well? So, a post-virus slump in demand for office space may double vacancy rates in key Sydney and Melbourne markets and cause a sharp spike in rent-free incentives offered by landlords looking to fill the vacant space, analysts say. Now, we looked at this in a previous video with regard to residential renting, where they were offering like a couple of weeks free here to kind of sweeten the deal. When you go into a commercial or retail space, they will give you an incentive. When I went into the retail space for our office, we received a incentive of a cash contribution for our fit out, and that paid for all of the flooring we put in. There was a concrete slab. We actually bought a vinyl that we could lay ourselves and give, paid for by the landlord, so they could entice us in. And the good thing about that vinyl, the plank laid one, was I could take it out afterwards. So now I have a whole lot of vinyl in the shed that I can deploy when we need it or sell. So and because it's a removable asset, there's advantages to it as well. So like other countries battling to overcome the pandemic, Australia is facing a sharp rise in unemployment. Morgan Stanley economists expect unemployment to increase to 9% in 2020, settling around 7.9% at the end of the year. Other estimates say it could rise higher. And remember, they're usually talking about the ABS data, not the Roy Morgan approach. Depending on your preferred poison, shall we say, for measuring unemployment, it can be much worse. I think underemployment and unemployment, those need to be combined. We're probably looking around 30%. The mass layoff of workers will cause a substantial reduction in demand for office space in the short term and reduced expectations over the medium term. This is likely to push vacancy above 10% in Sydney and Melbourne, according to the UBS analyst Grant McMaster. This will see a substantial increase in incentives of about a 50% increase in Sydney and Melbourne and a reduction in face rents of 10% over the next 12 to 18 months, he said in a note to clients. And the reason they want to get you in there is because it improves the value of their property. Their vacancy rate doesn't look too good, and they want to have continued income coming in. People will invest in either these ETFs or real estate investment trusts. Some of them in America even give you a monthly dividend, because they just want to have that steady income stream coming in. If you know of any in Australia that give a monthly dividend, let me know. I'm trying to find one. The job cuts will also result in net effective rents for prime office falling up to 20% over the next 12 months, UBS estimates. Savills, Australia's Melbourne leasing head, Mark Rasmussen, said tenant inquiry has slowed substantially across the city centre as a result of the illness crisis, but there was an upside, a significant rise in inquiry from both state and federal government. Okay, so the state and federal government, well, they're having to expand. Centrelink, aren't they putting on thousands of people? And we saw that in the last recession. We saw that in the data for Canberra. Just the demand there. There you go. But it hasn't, well, in the past, in 91, it didn't impact Sydney or Melbourne, did it? Most private businesses are avoiding any decisions if they can. The lockdown and shift to homework is fundamentally reshaping how businesses view their use of space. Smaller businesses that have previously refused to let staff work from home were now actively considering downsizing their office requirements. Exactly. And as someone who's done that, I highly recommend it. I highly recommend it. Oh, just the commute is gone. No, and I don't eat coffee. I was naughty today. I got myself a $1 7-Eleven coffee, but that's kind of a rare treat nowadays. Where in the past, it'd be every day. And that all adds up. It's $10 a day. It adds up. It's extra money off your mortgage, everyone. There's certainly going to be more people looking at the option of working from home, he said. But Mr. Rasmussen said while vacancies will rise, it's not going to be a bloodbath. Most large city corporates, particularly banks and global consulting firms, were already well down the journey of introducing flexible work systems, a fact that would dilute the impact of any illness-inspired change. In prime-grade office buildings, vacancies will stay fairly low, but we will see a substantial increase in incentives, he predicted. Melbourne's prime grade vacancy is expected to rise to around 5% by mid-2021, but now it may top 6%. Overall, landlords will be reluctant to drop rents, he said. So he's talking about the upper end of the market. If we jump back here, let's have a look at office vacancies. We'll jump to Melbourne. So he's saying it'll go up to 5% with the economic impact that we've had, with the unemployment rate that we've had. Look at what happened in the 90s. It went over 25%. What's fundamentally different? If anything, we're more of a service-based civilization now. We're less manufacturing, less industrial. What do you reckon, guys? What do you think? Do you think it's just hope? Is he hopeful? Or is this recession that's coming not going to be as bad as the recession Australia had to have? Morgan Stanley analysts are more bearish. The bank predicts Sydney's office vacancies will rise above 10% as unemployment escalates. So we'll jump back here. Let's have a look at Sydney, everyone. So they're thinking up to here, up to 10%, which we haven't seen since 06, just before the GFC. And in the 91 recession, or 1990 recession, it reached over 20%. So their predictions are still far short of what we got in the 90s. Why is that? Can someone explain it to me? Maybe they're just talking about the upper ends. And this isn't. This is talking about all, total. What's more concerning is that there is almost a 0.7% correlation between New South Wales job ads and Sydney CBD office net absorption based on data since 2007, the bank said. Despite the uncertainty caused by the pandemic, big tenants are hunting for new digs, with some seeing an opportunity to get more space at a better rent. Collectively, Westpac, Australia Post and the Commonwealth Bank are in the market for about 100,000 square metres in Sydney and Melbourne. Westpac began its search for 40,000 square metres late last year and will likely review those specifications once the full impact of the virus is known and it can assess how many staff wish to keep working from home. In Melbourne, the Commonwealth Bank is in the market for 18,000 square metres. It currently has staff located at 357 Collins Street and in Lang Walker's Mercer Building in the Docklands. Australia Post has a requirement for 40,000 square metres in Melbourne and is actively reconsidering its head lease at 111 Burke Street, a building owned by Brookfield Asset Management. Also in the marketplace is the state government's Victorian Civil and Administrative Tribunal, which needs 20,000 square metres. So there you have it, guys. Some predictions about a sharp rise in office vacancy rates. And the experts are saying it's not going to be anywhere near as bad as 1991. What's your thoughts on that? Thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join the channel on YouTube or on Patreon for a small monthly fee. You can support us via our affiliate links at Amazon or eBay, or Independent Reserve and Kucoin. You can buy our merch from HeiseSays, send us gold via Gold Pass, or support us via PayPal. Thanks, everyone. Have a great day, and I will see you next time. Bye for now.